My name is See Man. The stock that I want to recommend is Accenture PLC from S&P 500. Accenture PLC is a leading provider in information technology services. The company offers management consulting, technology services, and outsourcing. The company operates its business in more than 120 countries. Over the past few years, the margins across the IT and consulting services industry declined due to market saturation. However, Accenture able to stabilize its margins over the past year. Accenture experienced an increasing trend in 3-year average revenue growth, which is 3.39% in 2015, 4.61% in 2016, and 4.87% in 2017. Besides, Accenture also maintained a positive 3-year average net income growth for recent 3 years. The debt-to-equity ratio of Accenture is 0, started from 2008 to 2017, except 2013. This illustrated the debt of the company less exposed to credit risk. The current price-to-earnings ratio of Accenture is 28.68. The PE ratio is in an uptrend, which is 19.59 in 2015. 24.18 in 2016 and 26.27 in 2017. The uptrend indicates the value of the investor willing to pay for the company increasing, and the investor expect the company will have higher future earning growth. Lastly, I would strongly recommend Accenture PLC because it is an uptrend stock since 2002. In investment, factor analysis should be carried out to investigate the risk exposure in a portfolio. One of the factor risk is fundamental factor, which included earning growth, share price momentum, share price volatility, and financial leverage. That's all from me. Thank you.
Hi, my name is Chia Lee Hui. I choose to invest in Dora Restaurant Corporation in market S&P 500, which the current buying price is $91.83. For me, I choose to invest in Dora Restaurant Corporation because it is an uptrend stock that can give me more return in the future. Besides, it has a strong fundamental which has a positive earning history. That is so company can generate more revenue and efficient to manage their operating expenses. In addition, Dora Restaurant Corporation has the highest return on equity, which is 25.75%, which implies that company is effective using their cash into the business and generate greater income and increased growth for the company and investors. The risk factor for the stock are market risk and liquidity risk. Market risk can see by using beta, which is 0.21. This can say that the stock is less volatile than the market. And for the liquidity risk, is the lack of marketability of investment that cannot buy and sell quickly enough to minimize loss. Thank you.
Hi, my name is Dora Ling Siew. The stock that I choose to invest is the Procter & Gamble company P&G. P&G is a company which providing brand consumer packaged goods to their customers around the world. The reason I choose P&G is because P&G has leading market position in their products. The company also has 62 years consecutive of dividend increases. Besides, P&G has a low debt ratio with the value of 0.33, which means that there are only 33% of their assets are financed by the debt. In addition, P&G also has high ROE with the value of 18.71, which means that P&G has 18.71% profit for each dollar of common stockholders' equity generates. There are some risks need to face when investing in P&G. First is market risk. Investors need to face some unpredictable market risks, such as interest rate risk and currency risk. According to investing.com, P&G has beta value of 0.55, which means that they are less volatile by the market and less risky. The second risk is liquidity risk. Investors need to face the risk that the company are unable to meet their short-term financial demands due to the inability to convert its asset to cash without a loss of capital or income in the process. Thank you.
Hi everyone, my name is Lim Jian Hui, matrix number Bg15110223. The stocks that I choose is United Health Group Incorporation stocks. United Health Group Incorporation is a company that provides healthcare services and products to its consumers. Nowadays, the society is concerning about the healthcare issue in their daily lives. Many governments of different countries are also trying to increase the awareness of healthcare in their countries. So, the demand of healthcare products and services may increase in the future, and it will bring a good impact to these companies. Other than that, these companies has a large market capital which achieved $220 billion, and the price to earning or PE ratio of this company is also quite high, which achieved 20.78. For the revenue and net income, the revenue growth of this company has increased around 15.52% in these 3 years, while the net income growth of this company has also increased by 23.4% in these 3 years. For the ROA, which is return on asset, has increased from 2016 to 2017, which means increase from 5.99 to 8.06, while this company ROE or return on equity has increased from 2016 to 2017, which means it had increased from 19.46 to 24.54. I strongly recommend this stock because this company has a strong fundamental and financial position. So that's all from me. Thank you.
Hi everyone, my name is Tatiana. The stock that I choose to invest is Nike Incorporation in Dow Jones Market. Nike Incorporation is an American company that engages in the design, development, manufacturing, and worldwide market. Nike Incorporation also sells footwear aprons, equipment, accessory, and service. The reason that I choose to invest in Nike Incorporation is because the revenue of Nike Incorporation within 3 years has increased by 7.31%. The ROE of Nike also has increased to 16.03%, and the ROA was increased to 7.89% in 2017. However, the debt of equity of Nike Incorporation was 0.35. This company also has a large market capital, which is 107.46 billion. Although Nike Incorporation has listed in the top loser list in Dow Jones Market before, but it still shows an uptrend performance for now if compared with other companies. And the share price of Nike Incorporation also has the potential to rise in the future. So we should buy it in the good timing, which means we should buy low and sell high to earn the profit in the future. However, Nike Incorporation still face some risk factor, which is the intense competition and fluctuation of currency exchange. For the intense competition, it may cause the increase of cost of decline of consumer demand, while for the fluctuation of currency exchange, as the dollar of US depreciate, it may cause the lower revenue, high cost, and decrease of margin and the earning. That's all for me. Thank you.